Biotech, tech bio, and life science investors can seem like a mysterious crew to those who encounter them. Come behind the curtain and learn about the view from their side of the negotiating table. My name's Tom Froggatt, and on the other side of the table, I'm giving you exclusive access to angel investors, VCs, and others who are active in the human health sector as they discuss the fundraising market, how they assess investments, the mistakes they see, and their advice for those heading out to raise money to save the lives of patients. Come and see what it's like on the other side of the table. Pam Garside is an experienced angel investor and the chair of Cambridge Angels. She joined us on the other side of the table to talk about the importance of smart money, the implications of AI in healthcare, why tenacity, boldness, and perseverance are the most important traits in founders, and her top tips for your investment deck. So Pam, you're involved in lots of different things. There's many reasons that we wanted to talk to you on the show today. One of those things is that you're the chair of Cambridge Angels. And I was really keen to talk to you a little bit about that. For those who might not know, maybe you could just give us a brief overview of what Cambridge Angels is, how it works, what that organization is all about.
Yeah, so Cambridge Angels began in 2003, and it's a deep tech angel investing group. It is quite, I say this with all modesty, it's quite a high-end one. And it's when I joined, I always say this, when I joined 8 years ago, there were 58 men and no women. We now have about 14 women. There were women, anyway, long story, but it's a reflection of the deep tech backgrounds and age of a lot of our members. So it's sort of AI, quantum, engineering, computer science, biotech, quite a lot of software. And then I represent digital tech, really. So I was representing the whole tech-enabled health, digital tech world, digital health tech. And we operate as a group of individuals, as in when we make investments, we invest as individuals, but one of our members will lead the round. And we invest alongside VCs. We have 6 corporate partners that you can see on our website. And they like to be members because they can see what we're looking at early stage.
Right.
I personally like very early stage, so that we can get some of the, partly because of availability of cash and partly the tax relief. So we do early stage, and we meet once a month in person for a dinner. We have 2 informal presentations a month. We have a fantastic person, Emmy Nicol, who runs the whole thing with an assistant, and we screen deals coming in, and I think we had 1,200 applicants last year. Some of them are, just direct to the website, but a lot of are referred by our members. And it's got them extraordinary members in it. So the founders of a lot of well-known companies that you'd have heard of, particularly on the tech scene.
Yes. I was going to say, I would imagine, given the focus that you have, there's a lot of expertise amongst your group of investors.
Yeah, and it's interesting, having got to know it well and now being chair, I think we all angel investors of all types like to risk a bit of money, of course. 75% of our members, this is actually important, are exited entrepreneurs. So they've sold their own companies. I am not in that 75%. I'm in the 25% that hasn't sold their own company. So our sort of byline is smart money, and smart money from entrepreneurs to entrepreneurs. And I think that our members like helping the companies almost as much as they like the investment. So even if we don't go on the board, some of us as leading around will go on a board, but often as not we don't, but we still help. So you've got people like Martin Frost in the membership, who founded and built CMR Surgical to be well over a unicorn in value, and he will help companies. I will help my health tech companies, and that is invaluable to the the startups that we invest in. We're also quite nice to the startups that we reject. We quite often get, because we don't charge money to those who apply, or we don't charge a fee to look at it. We don't charge a fee on the way in to pitch. We don't charge a fee on the way out, no carry, nothing like that. But we do try to help the companies who we look at and we say, well, it's not for us. So I think we have a fairly good reputation in that.
Yeah, absolutely. And I would guess this is the case due to the name of the organization, but is this solely for companies based in Cambridge?
No, it isn't. Actually, it's a good question. So about 38%, just under 40% of our members are not based in Cambridge. I myself live in West London, weird.
Right.
But I go up there a lot because I teach at university and I do a lot with the university. But no, companies can come from anywhere. Now, having said that, because quite a lot of our members are obviously looking for EIS relief type companies, we do tend to not take companies from outside the country unless they have a US or European topco and a UK subsidiary. So no, they can come from anywhere. We have links to Scotland. We're linked to other angels group. We're strongly linked with Manchester Angels, which has not been going as long as us. So yeah, no, they can come from anywhere. Good question.
Yeah, interesting. And we're recording this, Pam, on the 8th of May, 2024. What is your view?
Do we wish it was 2021? Yes.
Well, you've maybe anticipated my question a little bit there. What's your view then on where the market is in general right now, and what you're seeing out there?
Well, I don't want to sound like an estate agent, but since the turn of the year, I think quite a lot of people are thinking that it is picking up a bit. And I was thinking, yeah, right, you're just, it's just a new year resolution. You're persuading yourself. But I think the markets are, and interest rates are going down. So interest rates shifted a lot of money away from venture, as you know. So interest rates are going down. Things, maybe green shoots of the economy, maybe a few on IPOs. Sadly, companies getting bought like Darktrace from overseas buyers. So I think it is picking up, but it's slow, and there are still quite a lot of companies not making it. When people ask me about my portfolio, I'm quite happy about this. They always pick up the ones that are big successes, and I've had a couple of those from early on, and I say, you don't ask me about the ones that haven't made it, because they don't exactly do press releases. There's quite a few not making it, and there's quite a few just rumbling along, and people like me would like to see them succeed. So you're keeping your powder dry as an angel sometimes to help those companies make it, because they're having difficulty raising because of the market. But I think on balance, not estate agent style, I think it is picking up a bit.
Yeah, I get that sense as well. I think we're not going to see a rapid recovery, I don't think. I think it's going to be a gradual thing. But there are some big rounds being closed, and big from a Series A point of view, for example, and things like that. And I think one of the things that's happened is that the quality of the business behind the technologies had to improve quite a lot for people to get those rounds over the line, and I think that's overall a positive thing. Individually, for some companies, of course, they've not been able to make it, and that's not a positive thing for them. But we had a lot of businesses, I know in biotech, but I would imagine across all types of deep tech, that great technology, not very well run businesses, that were still getting funded because it was great technology. And I think there's been a bit of a tightening up on that side of things. I don't know if you'd agree with that.
No, I think that's right, because I mentioned 2021 because that was a bumper year generally, but certainly for health tech, massive valuations. Yes, no, I agree with you. There are, wasn't doing my investment rate. I do small tickets early on, as I mentioned. I've just done 3 at very early stage, and they all had a bit of a feeding frenzy, which is what startup companies like, when angels all talked in sectors talk to each other and talk to the VCs. I do all the time, and they want to see what we're looking at. They've got really bright youngsters who are looking at the same things, and obviously the whole company. And there are certain companies that people say, get a slice of this. So there is positive energy at the very beginning of the market. I think, in the middle of the market, pre-Series A, a year ago, less so now, lots of companies going, oh, we're just doing a convertible or a bridge round to get us to Series A. And you go, yeah, right. You're quite cynical about that. So it is variable.
Yeah, absolutely. And the other positive part of it is there's some incredible science and technology around at the moment, isn't there?
Yeah. And before we talk about AI, which we're bound to, I mean, it is extraordinary, and it is interesting. I think probably 8 or 9 years ago, people would say something about AI in a deck, and you'd go, yeah, whatever. In my world, that would be if a company was doing software for clinical decision making, helping a clinician, a doctor or a nurse make decisions. That's clinical decision support software. It's not AI. So it wasn't AI. And then 3, 4, 5 years ago, it was every deck had AI in it. You had to really. Now, it's quite often not mentioned because it is assumed that you're using AI in part of your offer. Now, I have invested in an AI company that I'm going to get into trouble with the founder, that I don't quite understand what he does, but but all that my computer science colleagues say, this is extraordinary. So we listen to other experts. But I think AI is just fascinating socially. I mean, value-wise, crazy valuations. And will we see that settle? Probably, but then we'll see the next iteration.
Yeah.
Yeah.
Yeah, and it must be hard to assess from an investor's point of view at the moment because, as you say, it's so new, and it's not just the technology is new, it's the societal impact of the technology and how it's going to be adopted and what people are going to be comfortable with and what they're not going to be comfortable with, and where that boundary is going to shift, and all those things come into that equation, I guess.
In healthcare, there's a lot of hype about AI replacing doctors, but also there's a lot of now pushback on the hype, because some of the databases that even ChatGPT is using are, they're out of date, they're full of errors and hallucinations. And you could say in healthcare, Mark Zuckerberg says, move fast and break things. And in healthcare, you have to move very carefully, don't kill anyone, and don't lose their data. I know it's not being precious about healthcare, but it is a different sector.
It is.
And I think those expectations about how we use AI, I think we will absolutely have a world in health where AI will be there, and doctors who don't use it will, not be hired. But using it in the right way is the important thing. And it will be very useful for boring stuff like admin, billing in the US, processes, workforce. Equal, more so, I think, than in the clinical area.
Yeah, no, I can see that. So for you, Pam, when you're making an investment yourself, as an individual angel, what are the most important things that you're looking for in that investment? What are the kind of key criteria that you have for making that decision?
It's first and foremost the founders. And I thought that was just me for years, because I'd rather look at a team than a spreadsheet. And I'm very keen on the people, but I now found everybody does this. So particularly early stage, of course, because you don't have any track record at that point. You don't have any revenues, you just have projections. So the founding team is really important. Solo founders, I'd rather invest in a founding team than a solo founder. So looking at the team's terribly important, which of course, in your world and your work. Closely followed by the tech. What are they offering technologically, and is it protectable? And ideally patented, but you can't patent software really. So there's something very special about this technologically, a moat around it, as it were. And the market, the size of the market. So size of the market in my world, it can always be a I see these slides of global TAM, and you just kind of make it up.
Yeah.
So those are all a bit boring, those slides. But looking at the market, I also, even early stage, would want to know if the founders have actually gone and talked to customers, because
Right.
I'll go, who's going to buy this? Who's going to actually write the check? And they'll sort of pontificate, but some of them have absolutely no evidence.
Yes.
I'm very impressed with founders who've gone out. One of my companies that offers services to GPs went and settled themselves for months in a GP practice.
Okay.
And that was pretty cool. So getting to know your customer, even at a very early stage, is very important. And it's sort of an answer to the question. In my world, there's lots of passion projects.
Right.
So in fertility, menopause, mental health, COVID, even COVID recovery, there are lots of people with passion because of their personal stories, and those are their families.
Of course, yeah.
And they think that passion will get them through without particular tech. And they are amazing people, and they're relentless, and they have tenacity. But I don't really go for that sort of thing. There's too many of them out there.
Yes.
And they will say, well, we're better than the other person. And then I absolutely avoid the woo-woo end of the scale, which is does well selling direct to consumers of all sorts of biomarker or even less scientific stuff. So I avoid that one. Yeah,
that makes sense.
but the founders are the most important.
So on that topic then, this is something that I think everybody says these days. Some people mean it more than others. Sounds like that's been part of your philosophy for a long time. When you say the founders are the most important, what is it that you're looking for in them beyond, you talked about having gone and spoken to customers. So I guess understanding that commercial reality, or actually who's the practical adoption or application of the technology. What is it in the founders that you're looking for, do you think?
Difficult. I suppose it's deeply psychological. I have invested in company. This is a roundabout way of answering. I have invested in companies when I only met them online, because you had to in COVID.
Yeah.
I really like to meet people in person.
Yeah.
But there's just a feeling like my maddest investment was the best I did.
Okay.
And I got lots of what on earth, with using different words, what on earth did you invest in that for? And I just thought this guy and his co-founder was, they just had something. They just, and interestingly, doesn't always happen. They, using trendy word, pivoted. They changed their offer significantly from what I invested in,
Right.
but they were able to do that because they followed the market.
Yeah.
And it's no use. It's not very scientific to say you just know. I look for really bright people with lots of energy who are going to contribute lots of energy to this company. I like them to be responsive. Like if I get back to them, you can imagine I get a lot of decks a day.
I'm sure, yes.
20% of which probably bonkers, but if I get back to them, or I help them, or I ask them for something, I want them to get back to me.
Yeah.
And that sounds superficial, but it just shows that they're responsive. And
Yes.
I am smart money, particularly people like me. I've got loads of friends who do this. For the amount of money we're putting in, we have high leverage. We're not putting in much money, but we're helping them. So
yeah,
I think it just shows, and people who listen, sorry, some of them don't listen, and you think, oh, don't do that. So it's definitely a sort of mentor-mentee thing. And I'm not saying we're always right, we angels, but that capability of responding at midnight to an email, I love that. I know that's terrible, isn't it? You're not supposed to say that in this working world.
Oh yeah, but I don't
good.
know. I'm thinking about starting a movement against this, right? Because I just think you've got to work hard, right? You've got to be, and it's not just about working hard. It's about having the passion for it, that you're willing to do that, isn't it?
Yeah, well, I worked in America for 10 years, and
Yeah.
I wouldn't like to live there now, but there is something about the work ethic there. And, WhatsApps at midnight, that I like that sort of thing. I respond, but yeah. So there's that sort of energy as well.
Yeah.
And then they're not their passion for what they're doing, as long as it's not sort of misplaced passion as well, I guess.
Yes. Yeah, that makes sense. Now, it's okay if you can't, but can you tell us a bit about your maddest investment and why it was your best one?
Yes, I can, because he knows that people say that.
Okay.
It's Accurix, ACCURX, and two founders of Entrepreneur First.
Hmm.
One of them, I run something called the Cambridge Health Net with a colleague of mine, and
Yes.
it's not investment; it's bringing people together across the health sector in the UK. And the founder gate crashed my meeting where I had the chief medical officer speaking, and I said, "Oh, who are you?" I thought he was one of my junior doctor sort of
Right.
colleagues. And he said, "Oh, I really wanted to hear Sally Davis speak." And then he said, "Well, we're starting a company." And so I went and met with them several times. This was way pre-COVID. And what they do is, if in the thing that you might recognize is during COVID, if you've got an alert on a text about a COVID vaccination,
Yeah.
about 40% of them would be from them. But they're in communications between GPs, their staff, and patients. And they developed a product that was so popular with GPs that GPs are clamoring for it. And they had a freemium model. Don't know whether this is too much detail.
No, that's fine. Yeah.
So again, a bunch of my friends, having been rude about me investing, said, "Oh, freemium, yeah, GPs will never pay for anything." And they paid for it because it's
Yes.
so good. And they did extremely well in COVID, and they're now selling into the hospital, sort of, what we call acute care systems. So that was my maddest investment that's done very well. And they've got serious VC investment 2.5 years ago. Yeah. So they're way beyond my investment scale now, which is great.
Yeah, absolutely. And correct me if I'm wrong on this, but it sounds like one of the things that caught your attention was the willingness to crash the meeting
I
and get
know.
in the
And
door.
that person, he's called Jacob, the founder, had a meeting of all his users 2 weeks ago at the Royal Society of Medicine, which was where we held our. And he WhatsApped me and said, "This is the place where I crashed your meeting, and now we've got a users meeting of 250 people." It's quite funny.
Yeah, that's excellent. And then the other thing I was keen to ask you about, Pam, because obviously you yourself are an angel investor, but you also work with lots of them and you know lots of them, and kind of, you know, I think there's a different frame of reference for angel investors than there is for VCs, isn't there? You're coming from a different place. It's your own money. As you said, you know, a lot of the people you work with have been entrepreneurs, so they understand that journey, and entrepreneurs tend to be wired slightly differently sometimes as well. What, you know, if you were advising a leadership team of a company and they were planning to bring angel investors into their fundraising strategy as well as VCs, or perhaps prior to VCs, what are the things do you think that people perhaps don't take into account about the differences between angels and VCs, and what should they bear in mind, do you think?
Well, they're often at different stages, as you know. That there might not be, in very early stage companies, they might only just have formed the company and they won't be near VC investments. But well, we VCs want to return their funds, and that's all right. That's legit. I do advise companies, be careful of, get advice on the terms. You know, don't just accept a first term sheet. Now they need a lead investor of some sort to set the price.
Yes.
This is post angels. I mean, angels set prices too. And I know this is like saying to somebody, which I often do, be careful who you work for. I do lots of mentoring, and I said, go and work with somebody you really like. And they go, "Well, we can't do that. We don't have a." I say, "You do. You can say no. You can say no if you don't want to work with that person." And it's the same with VC. If you hear anything dodgy about their behavior with previous companies, just beware, because there is a range of behavior in VCs. And term sheets can be particularly rapacious. I would get a good lawyer as well, a good set of lawyers to help you do that negotiation. And often, you know, I was saying that my angel group helps individual companies. Often having a heavyweight angel on board really helps with negotiating with the VC as well,
Right.
because they've got the experience. In my world, I talk to a lot of health VCs. There's a whole group of us, and increasingly ones from America coming over, the big people. So we, I'm just trying. Oh yes, don't forget as a startup that people are all talking to each other.
Yes.
Because they sometimes are surprised. Oh, you've heard, and I say, well, yes, so and so mentioned you, and we're referring between us. So yeah, I think you just have to be a bit careful with VCs. You know, they weren't called vulture capitalists by accident. And I think angels, could I say, a bit more cuddly,
Right.
soft
Yeah.
cuddly
Okay.
and
Okay.
helpful. So yes, the other thing is, well, I've mentioned this before. We have 6 corporate partners at Cambridge Angels, but and there's a lot more that would like to be, because, let's say, we've got some pretty serious tech entrepreneurs, and they want to know what we're looking at. So there are relationships between angels and VCs as well.
Yes. Yeah, that makes sense. And then, well, I suppose it'd be useful to look at this a different way. So, if someone is primarily focusing on angel investors as their strategy for a particular round, you mentioned earlier you get lots and lots of decks through, you meet lots of people, you've seen lots of pitches over the years, all that kind of thing. What are the things, either in those initial approaches or in the pitch or the meetings or things like that? What are the mistakes that you see again and again? What are the things that people do that you kind of think, oh, I wish you hadn't said that or done that?
Well, I think email etiquette's quite interesting, because there's a guy called, I mentioned, Peter Hames, who founded Big Health and went to California, left the NHS and wrote this excoriating thing about the NHS doesn't know how to do tech. He's kind of right. 12 years ago. And I met him because he wrote me such funny emails right at the beginning. I didn't invest. I should have done. And I saw him recently and reminded him of that. I think you do have to have some social skills. But past that, when I look at decks, okay, I've mentioned the ridiculous TAMs. In my particular niche, I see these slides that go, we're going to sell into the NHS. And then the next slide would go, and then we're going to America. And I just sort of clutch my head and go, shoot now. So they have to show that they have absolutely thought through and understood what it means to sell their product into the NHS. And America is a massive market. It's 19% of the biggest GDP in the world spent on health. It is huge, significantly outsizes any other market. But it is extremely expensive to get into. And I saw a deck the other day saying we're going to spend £100,000 hiring someone in the US commercial director. And I said, this you could sort of times 4 that, and you might get some. It's that lack of realism about the market that is a mistake. A lot of people do a sort of very superficial competitive analysis, with all those charts with ticks and crosses. And I like to see that they've looked very deeply at what and who and what sort of thing could compete with them. What else? Yeah, I think that the decks that stand out. Oh, I know this sounds silly. A lot of people don't pay attention to the graphics. They've looked at it so long. You probably see this. They've looked at this deck and they refined it, and it's lost its flow. Right. And they haven't used the graphics right. And you get to a slide and you think, God, it's going to take me 20 minutes to read this one.
Yeah.
So I think you have to step back. And I often say to them, if you've got any graphic advice, because, people like McKinsey, I'm not saying that McKinsey, have whole divisions doing slides. And I think sometimes that may sound very superficial, but yeah, I do think that that's missing. So the other thing is, don't put your valuation on, clearly. I think that's naive, because even if you have one in mind, you've got to negotiate that. And there's mixed opinions about whether to put your exit strategy. I think it's not bad to say people like Siemens might buy us in 7 years. Some people don't like it because they want more ambition, like we're going to go public.
Yeah.
But to me, it shows that they've thought about, would a big company buy them? Now, again, you'll know this example. The example I see too often in the data area is we're going to be another Flatiron.
Okay.
Do you know Flatiron was sold to Roche for way over that was $2 billion. Anyway, it's a lot of dollars.
Big.
And I know quite a lot about Flatiron, and they go, we're going to be another Flatiron because we have usable data. And I think, ooh, right, talk me through that. So I think superficial comments that sound quite showy offy are not great.
Yeah. And I guess that links back to the TAM part that you were talking about, right? Because I think a lot of people are sort of, a lot of people look at that and go, right, how can we make this market the biggest version of what this market actually is, so that we can make it exciting? And they talk about capturing 1% of $1 trillion market and things like that. Whereas what you're saying is actually, but what's the real market? You're better off capturing 10% of a $500 million market.
And what are your
and making that profitable?
And what are your first steps going to be? The other thing that we always discount, but you can't blame them, they've always got the hockey stick revenue line. And I sit on the investment committee for Cambridge Enterprise, a spin-out company of the university, which is great honor. And you'll know this as well, in biotech and drug discovery, I don't know the science behind a lot of it, but they'll have a Gantt chart of their trial sort of projections. And you go, what if 2 things go wrong in that? That's going to extend it by a year. I think those are, let's say, ambitious. And it's not just biotech. The project plans for when you get there, how you get there, are over ambitious. And you'll say, well, what if that person left? Or how are you going to hire that person? Because there's not many of them, that sort of thing.
So would you recommend then that, because I guess there's a tension there, isn't it, between, you don't want to then create a plan where everything's gone wrong and this is how long this is the longest it could take. Would it make sense then to have, look, this is what we plan to do, but here are the risks associated with this, and here's the impact of those. If this person did leave, that would set us back, and it'd set us back probably 6 months, and we're managing that in this way by making sure we retain them by doing this. Just an awareness of because something's going to go wrong, right?
Exactly. And I think your deck has to be fairly brief to get attention, but it's that thing, I suppose I keep coming back to it, that they have thought it through and they've considered it. And you ask them a question, you go, what about the risk of this? And they've thought it through. And I was just reviewing some things. I'm an advisor to Novo Nordisk of Ozempic fame. And they have wonderful venture and tech and venture builder programs. And I just saw a deck at the weekend, sadly, working at the weekend, and it was just so good. As it answered all these things, and it was quite detailed, but not too detailed. And you can just sense when people have really, really thought this through, and it's not that they're all cowboys out there, but yet it's a balance between hitting an angel's desk or laptop and getting some attention, but not being too wordy and long.
And I think, to your point, like you say, it's not that people are cowboys, it's that there's a lot of naivety, isn't there? And if you and a lot of them through your work with the angels, but if you meet experienced entrepreneurs, they're optimistic, but they're not naive, right? They understand what might go wrong, and they've thought, as you say, they've thought it through, and they've thought about, okay, well, actually, this is the biggest risk that we have, so we need to do something about this, or actually I can see this going wrong, so how are we gonna what's our plan around that if things it's the scenario planning, isn't it, that they do in advance.
They've thought it through. But then but some of us, as I did with my quote mad investment, you just think they're going to do something. And there's that gut thing, but I don't know how to describe that gut thing. It's worked a few times for me, not other times.
Well, I think you're right. I think you get a sense from someone, don't you, that they're just gonna, whatever goes wrong, they'll figure it out. They'll make it happen.
Yeah,
Yeah,
yeah, that's right.
And
there are always series of unfortunate events that lead to some companies going
of
wrong.
course,
It's interesting how often they go, "Oh, we ran out of cash," and you think, "Oh no, shit, you ran out of cash. There must be a reason for that."
yes, exactly,
Run out of
exactly.
cash is a bit of a catch-all, isn't it?
Yeah, that's usually how it goes when you do things
When
wrong,
things go
isn't
wrong, yeah.
it?
Run out of
And
cash.
just on that point around that sort of, I guess, that naivety or that forward thinking. When you're looking, you mentioned before the founders are really important, and there's a feeling that you get from them. There's a connection that you get that's important. How much do you look at the experience and the track record and the background of the founders as a key element, or is it really more about the personality and the?
No, we do look at the background,
Yeah.
definitely. There's a company I'm looking at the moment where actually both of them are exited entrepreneurs. They're young, but they've done it before. Now, actually, two of the three I mentioned at the beginning are in that category.
Okay.
So they've done a company before, even though they're young and it's early stage. So that really helps. In healthcare, you kind of feel you have to have a doctor on the deck, but there are doctors and doctors. Are they advisory? Are they really going to do anything? Are they going to do? You have to have them sometimes for clinical governance. So you quite often will look for the depth of the clinical expertise.
Yes.
And the issue that sometimes there is with clinicians that they don't get the whole financial side of things.
Yeah.
And another thing I suppose I should say we look for is that they've done some thinking about unit costs of whatever they're offering and when they will get to MVP.
So you're kind of looking at, particularly in health tech businesses where you focus, you're kind of looking at who's the healthcare expert, who's the tech expert, and who's the business expert. And that could all be one person, I guess, in some cases, but those bases have got to be covered.
Yeah.
Yeah.
Because having a clinician is good because health is very difficult to understand. And somebody who's worked in a hospital, often a doctor, but it doesn't have to be, who actually understands particularly how the medical profession works.
Right.
In America, people are much more honest and direct about money with doctors. They're rational economic actors in the system, and money is not a grubby subject, and it is here.
Yes.
So you have to have somebody who understands the incentives, and sometimes strange incentives in a health system. So having that, but equally, if you have a bunch of naive clinicians, you think, well, you have no idea how to develop this thing or sell it. So you have to have a balance. I also look for their advisors who've signed up, who've actually signed up, not just saying, oh, we may have somebody, what's her face, advising, because the quality of advisors is important too, that they've managed to secure. I look at that.
Yeah, that makes sense. That makes sense. And then I suppose as a final point, Pam, given where we are in the market, given that it's, perhaps gradually improving, but slowly, and it's still challenging out there, is there sort of a key piece of advice you'd want to leave people with if they're out there trying to raise some money right now?
Be tenacious, keep at it. I mean, the number of successful companies, in fact, two of the companies I've mentioned, very successful companies, talked to 40 VCs, one of them.
Right.
So we talked to 40 VCs and got no interest.
Yes.
And VCs are programmed to say no. And maybe for good reasons. So be tenacious. Don't lose hope if you're passionate about your company. I was going to say be persistent with people like me. I shouldn't say that, should I? Keep going. The thing that you want that is easy for me to say, difficult to manufacture, is some sort of breeding frenzy of people wanting to put money in, and you'll say we're going to, at the moment you might say we're going to close late June, or they might say early June, but you think you're mad. You don't want your deck to be swilling around the system for 2 years, and you come
Right.
back and you say, I've seen that before.
Yeah.
And again, it's like selling a house, isn't it, on Rightmove, and you see, oh, it's been on for 9 months. If you can hit the market and create a lot of interest and close quickly, now you're going to say that's difficult, but that's the ideal, really. Yeah, and have somebody connected to help you, I guess. Again, an advisor will say, talk to these people.
Yes. Yeah, and I think that's key, isn't it? As you say, you get hundreds, thousands of decks, and everybody who's in your position or at a VC firm is in the same boat, right? They get approached by stuff, and it's possible to get attention through all that noise, but it makes it much easier if someone comes to you and goes, "Oh, look, you should talk to this person."
Yeah. Because remember that DeepMind came to Cambridge Angels years ago, and I believe everyone said no except 2 people.
Really?
So just keep that in mind. An amazing, extraordinary company that Google bought. But there's always those things to keep in mind. You must believe in what you're doing. Yeah, work hard. Show people like me you're going to work very, very hard.
Yes. Yeah, I think that's key.
Take
And
advice.
that's a good point to finish on, I think. So thank you so much for joining us, Pam. It's been
Pleasure.
great to talk to you, and really insightful. Thank you.
Thank you.
Thanks for joining us on the other side of the table. I hope you found this episode really useful, and if you did, please hit like and subscribe and share this podcast with someone else that you think will get something from it. And if you want more content from me, you can find me on LinkedIn, TikTok, Instagram, YouTube, and Medium. Come and follow along. There's lots more out there. And I look forward to seeing you next time.